Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday, March 18th, the day after St. Patrick's Day. Hope you guys had a good, safe St. Patrick's Day here. And to kick off the week, we got the Home Builders Index for the month of March. So back in February, we had a 46 number, basically. So it went from 51 to 46. So builders, what that means is that fewer of them were feeling a little bit more confident where the housing market was going. So they're kind of pulling back a little bit. So we kind of figured it would go up a little bit in March, and it dropped again. So we had 2 months in a row that had declining values. So something to kind of keep an eye on, obviously, as obviously we need more buildings. One of the biggest issues we're running into is lack of inventory, but maybe what they're finding is if you dig a little bit deeper, it's basically single families is what they're having issues with. But again, I guess it depends what market you're looking at and maybe the cost standpoint of where they need to be at because of materials and everything else versus what the market is on. As we're seeing here, at least in the South Bay area of Los Angeles, we're seeing a lot of properties going above asking price. So it's kind of looking like 02, 04 range a little bit right now in the immediate time here. How long that lasts, we don't know. So let's jump over to the headline news. That's all we have for economic news releases today. But also, keep in mind, we do have the Fed's meeting. They'll be having their announcement this coming Tuesday, rather. I'm sorry, tomorrow. They'll have their Fed announcement tomorrow. And then, so that could definitely drive the market. But right now, the stock market's down. It's not so much due to the home builders index, but due to Cyprus over the weekend. There was the European community they're looking, as we mentioned last Friday, we had talked about Cyprus needing a bailout, and there's a lot of concerns as to how they're going to approach this situation because they were directly affected, the banks in Cyprus were directly affected about the restructuring of the debt and the bailout to Greece as they were heavily invested in Greece. And they don't have a whole lot of GDP. They may represent like 0.3% of the whole European zone GDP in that area, so very minuscule compared to some of the other countries that are in there. So what they did was they did allow, they're going to go ahead and put $10 billion allocated to the bailout of Cyprus. But this big stipulation is they're going to hit basically a levy against those who against the depositors of those banks. So anyone with over 100,000 euros is going to get hit with 9.9% tax basically, and those with under 100,000 will be hit with like 6.75%. So basically, they froze their accounts in there, and by Tuesday, because they have a holiday on Monday, they're going to go ahead and take that money out from it, and then they'll have access to it. So those people who have money in there are going to get hit with to be basically helping out with the bailout. So they'll be putting in money that were in there. This is a shock because we've never had a situation like this where the government's levying those bank accounts. Usually there's insurance that will cover it, or there's a government will kind of help bail them out. But in this situation, they're actually going to levy against those. Why is this happening? A lot of it has to do with the banks have been pretty loose with not telling where the money is coming from. So we had there's a lot of people coming from Russia bringing money in, and a lot of it is the mafia base and not questioning where the money came from. So they're putting a lot of their money in there, and they don't want to be viewed as basically bailing out the mafia. Is how this is really what's coming down to. So that's what's kind of driving the market today. So let's go ahead and take a look at the bond market and see what's going on here. And we're having a nice little rally here. We have an improvement. We left out the day on Friday at 102.69 on the 3% coupon, and now we're at 102.94. So we have a nice improvement in the interest rates and the pricing of the interest rates. So right now we're actually above the 10-day moving average, and we're testing the ceiling above. So this could drive it a little bit, as well as comments from the Fed. There's concerns, there might be something in the statement that perhaps they may start alleviating this year with the quantitative easing purchases. So the stock market will be definitely watching the Fed. So listen for that. If there's any indication that the Fed may start easing on their purchase program, then you might have some. We may have some issues, at least with the stock market, and probably a little bit with the bond market as well. All right, folks, so great day today, at least for the bond market-wise. Stock, obviously not so great. You guys have a wonderful day. Thanks for watching, and we will see you guys tomorrow.